What's up, guys? Look, we all know buyer demand is increasing. The urge to become a homeowner is on the rise. But do you as a potential buyer know the difference between a mortgage pre-approval letter and a mortgage pre-qualification letter? So you may be asking yourself, well, what the hell is this guy talking about? Or what the hell is this? What's the difference? Well, first off, let me say this. Look, you don't need to contact me or any other agent for that matter to go see houses unless you have first talked to a mortgage lender and obtained a mortgage pre-approval letter. Not a mortgage pre-qualification letter, a mortgage pre-approval letter. There's a huge difference, and we're going to go into a little bit more detail. So why do I need this piece of paper? Well, you need it to make an offer. Even if you're a cash buyer, we need a letter from the bank with proof of funds to make an offer. But do you actually know how much home you can afford without talking to a lender? Do you know your debt to income ratio? Because that's going to affect the amount you can borrow. Are you a W-2 earner or are you self-employed? Look, these are important questions because there's checks and balances when it comes to obtaining a mortgage. Now, a mortgage pre-qualification letter can best be described as a prediction on the amount a buyer can borrow based on the information they filled out on the application. And that amount is basically as good as the piece of paper it's written on. It's not worth anything. Now, a mortgage pre-approval letter is when a lender gives their written commitment to a potential borrower. This is completely different than the pre-qualification letter. Now, in order to receive this pre-approval, the lender is going to need some docs from you. They're going to need your last 30-day pay stubs, your last 2 federal income tax returns. If you're a 1099 or self-employed, they're going to need the last 2 years of your 1099s. They're going to need proof of any additional income, secondary jobs, Social Security, alimony, etc. Your last 2 bank statements, statements from investments or retirement accounts. If you sold a property, they're going to need a copy of the settlement statement from closing. If you're a renter, they're probably going to need contact information from your landlord to make sure you've been paying your rent on time over the last 2 years. You know, if you're divorced or separated, they're going to need the divorce decree or separation agreement. A gift letter if a family member is helping with down payment, and a letter of explanation for maybe any late payments, collections, judgments, or any derogatory items on your credit history. Now, some of these items may apply to you, and some of them may not. But once you've turned in all these docs to the lender then sends all this paperwork to the lender underwriters. Now, a lender underwriter then determines if the risk of offering a mortgage loan to a particular borrower under certain parameters is acceptable. Now, if all goes well and the underwriter doesn't need any more documentation to verify this amount, then a written commitment for a specific dollar amount is given to you. And boom, the heavens open, and you give me a call, and we go shopping for a new home. Look, it doesn't make any sense to shortchange yourself when you're about to make one of the biggest investments, biggest purchases in your life. In today's market, this seller market that we're still in, it's imperative that you obtain a pre-approval letter. Look, it's going to cost you time and money in the agent's time if you don't have the proper documentation. Look, give me a call today. Let's just discuss your real estate goals. Now may be a time